What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, May 6th. Alright guys, Nvidia stock on Friday finished the day up $29.72 per share. That's plus 3.46% in regular trading hours. It is down just under 2 points here in the after hours. But listen, as always, guys, take after hours movement with a grain of salt. That volume is going to be very, very low. So stocks get bullied and therefore pumped as well very easily in the after hours. So take it with a grain of salt. But let's take a look at this thing and pull out as much possible bias as we can. We're going to take a look at the volume profile. We're going to take a look at the psychological levels that we need to be aware of because the smart money, the big money, is going to be paying attention to that. And then we'll finish out with the expected move and the directional bias coming out of the chain. So let's get started here first with our little volume profile analysis here on the 5-minute. Now, we got a little pop this morning. Of course, that was from the news we got 1 hour before the market opened. You know, that jobs report beefing up some hope, I would say, for Fed rate cuts here. So that pushed things higher, and then, you know, the individual stock kind of took over for the remainder of the day. Let's take a look here. You know, we can see right off the bat that obviously there was some bullish bias here. We saw high out of context volume on the green bars, and then as that red bar hit, we saw it start to fade. That's on news. Okay, so we can kind of look ahead. We see a very contextual open, high volume opening bar, and then a quick fade. However, we saw volume hold a little bit higher than is typical. Normally, we see a pretty smooth fade in these blue chips. We held a little bit deeper into the day. At least 30 minutes into the day, we held that higher volume, and that was really on this push higher, and that began to fade right after this kind of battle bar. You can see that wick up top, which tells me that we saw a good amount of both buying and selling on that kind of shorter term reversal candle, and that contributed to that higher volume, and then it immediately faded once the stock started to really, you know, kind of fade back downside and consolidate. So this, to me, you know, it was on an upside move. However, I think labeling that as bullish bias would be a little bit, let's say, irresponsible considering the mixed in red bars of equal volume. So I'm not going to do so, but just understand that we were seeing higher, beefier volume deeper into the day than what is contextual on an upside move. Okay, so I mean, the reality is that's what we saw. Now, volume kind of faded. We saw a little bit of a pop here. Yeah, it's not really out of context enough for me to care. Moving through the day, this to me sticks out, right? This right here, we saw, this is very reminiscent of like a repeat offender kind of setup. I'm sorry, not a repeat offender, a breathe and go kind of setup when we're looking at volume. That would be on like an in-play stock, right? And what I mean by that is because we see a very similar volume profile on those kind of like picture perfect breathe and go setups. You see increasing volume on a push upside, which to me shows an increasing level of confidence in that move. And then as soon as, let's pull this back down, as soon as that begins to reverse, which in this case, you know, this area or this area, it's a little bit different on Nvidia, but like this area would be perhaps an entry opportunity on a breathe and go on an in-place stock. Okay, I don't mean on Nvidia, it would have to be on an in-place stock. However, just to explain the volume profile, as this starts to pull in, we start to see this volume pull in. Okay, the green bar pops back up, red bar right back to contextual faded out volume. That shows me that on the red bars we're seeing decreasing confidence on the break back downside, whereas on the green bars on the move, on the pull away from this 9 EMA and the 20 EMA, we're seeing an increasing amount of confidence. Okay, that's a bullish bias. I mean, kind of by definition, that's a bullish bias. That volume, it's very real. It's tracking something very real, right? I'm only interested in the things that are one of two things. They're tracking something real data, such as volume, or they're incredibly psychological. That's self-fulfilling prophecy mentality, like an EMA, like a 20 EMA, that purple line, okay? That's something that everyone pays attention to. At least most people watch that intraday. Now, just to finish out here, and then we'll move on, throughout until the close, kind of a contextual, you know, volume profile into the close. And then we saw this higher volume bar. The reason it's white, by the way, in case you don't know, that's because it's a doji candle. It opened the same as it closed. It's very common, not necessarily a neutral white doji, but to see very little movement on that first candle immediately after the closing bell with very high volume. The reason for that on these blue chips, especially Nvidia, we've seen it a lot as of late, is the rebalancing from the funds and the institutions. Okay, so let's move on here from this. Let's start taking a look at those psychological levels that we're going to see traders, institutions, and therefore me and hopefully you paying attention to come Monday. So back on Thursday, you guys, we reclaimed both the 50, the white line, and the 200 period moving averages here on the 30-minute chart after kind of not being able to do so back on Wednesday. Okay, so we reclaimed those yesterday, Thursday, right? And then on Friday, we didn't really get any retests, but we held above there. And that in and of itself, for Friday's trading day, I see that as a positive movement regardless of the percent gain, because on this 30-minute in particular, what this day did is we saw higher volume pulling that 50 period up. Now, why do we care, right? Well, I care because that 50 period is something that's heavily watched on a heavily watched time frame like the 30-minute, and it's just another domino, right? It's another psychological potential support level, and I'm looking for as many little checks as I can get. Okay, this would be one of them. What I really want is that 50 period to get upside and get up underneath, get some feet up underneath this upside move. 3.5% day, that's a good day, but I want feet up underneath that move. One of the big major problems, not that today was such a massive move, but one of the big problems with bigger moves is that it leaves a lot of bears with this perception, or bulls, I guess, in the case of it being a downside move. It leaves a lot of the contrarian traders with the perception that there's a lot of room for a reversion trade without much hang up, let's say. So if you're able to make a big move, in this case to the upside, and then rip up some psychological hang-ups as soon as possible, that's a good thing. Okay, because that can discourage a percentage of the bearish crowd who are paying attention to this chart, which many of them likely are. It's a very popular time frame. All right. So listen, come Monday, bulls, what I would really want to see, this 50 period continuing higher, and the stock, if it retests the 50 period, I don't mind what volume it retested on as long as it bounces away on higher volume. Okay, that could help eventually make a push toward that $900 region. Now bears, getting back beneath, ideally at least the 50 period would be a great thing to see. Currently it's about 1.8% to the downside away. That's likely to be a little bit smaller come Monday because the 50 period is likely to continue moving upside, catching up with Friday's move here. But the best case scenario, if you're a bear on the 30-minute in particular, it is 2.8% away, but getting beneath not only the 50 period but also the 200 period, ripping downside through one if not both on higher volume, low volume retest of the lower level. In this case, that would be the 200 period, and then boom, back to high volume on the rejection. That would be a beautiful thing to see, because then you're reclaiming both of those as potential resistance levels in a single day. All right, and that could set you guys up for a downside test of 850, which would be the next level I'd be watching, at least specific to the 30-minute here. Let's move on now and take a look at the 4-hour. You guys can see we reclaimed the 200 period today. That's important, right? Because we've struggled with the 200 period on the 4-hour chart here on Nvidia as of late. That has been a struggle, and we reclaimed that, and we did so well today. Now, listen, come Monday, come next week, early next week, if we end up seeing a back test of that 200 period, I'm a fan of that. I'm a big fan of confirmation. I'm not, it's great to just see a rip through and it just runs higher. However, it's not all that common. A lot of times what ends up happening is there's too much left unsaid, so to speak, right? I want to just get every possible scenario out of the contrarian traders' heads. In this case, that would be a retest of the 200 period on the 4-hour. I want to retest it, and then boom, a ton of volume pours back in, and we bounce off of that leaving no doubt that the 200 period is now being treated as support, at least in the short term. And in doing so, that would help this 50 period get up higher and higher. Ideally, I'd like to see that cross over 850 and eventually get back above the 200 period just to keep a little bit of a tighter psychological level to the downside with an uptrending stock. But, ultimately, being that this video is more geared toward Monday, this is the 4 hour. The 50 period is going to take its time moving upside. So any upside movement in that 50 period, getting above 850, that'd be a great thing to see in a single day, but expecting that this is going to take its time. Now, the most important chart of all, guys, it's always going to be the daily. Okay, the reason for that is because it has the most, at least in my opinion, it has the most eyeballs. All right. If you're missing something on the daily, you're also missing something on every other chart, essentially. And that being the case, for that reason, when I'm trading intraday, I have it automated, linked, so that whenever I'm watching the 1 minute chart or the 5 minute chart, even if I'm scalping just in-play stocks, I always have it automatically pull up the daily. I also have it do so with the 30 minute and the 4 hour because I'm a nerd, I'm obsessed, right? But I always want to look at the daily also. Because if things look good on the 1 minute and the 5 minute, and I'm about to enter and I glance over to a different monitor and I look at the daily and all of a sudden, like, whoa, there's a huge multi-year resistance level or something, right? That's a problem. And I would miss that if I'm not paying attention. So listen, the daily kind of trumps everything in a way. And also it does have the most eyeballs, and it has the most eyeballs from the places that carry a lot of weight, like the institutions and the funds, the algorithms. So let's take a look here, guys. Now, this is the daily. It's not going to show after hours movement. Okay, again, after hours, it's little changed. So let's take a look at this. That's okay. Really, the story, I think the most obvious story, which is the one that I want to look at because that's the easiest one for people to see. Come Monday, to me, is the obvious story is two things. The channel between $900 a share and not actually 850, but the 50-day moving average. All right, listen, bulls, any downside test of that 50-day, I want to see that hold. We broke that today. That's a tremendous deal. That's a really, really good thing to see if you're a bull. A break upside of the 50-day moving average, but we haven't really had a true retest of it, whereas we were treating it as resistance for the last couple of days. I would happily see a retest of the 50-day as long as we bounced from a bullish perspective. But the goal really, guys, come Monday on Nvidia, if you are a bull, is a break upside through 9 on high volume, low volume retest, high volume bounce. All right, if you're a bear now, kind of that backstop, you don't really want to see 900 break. Okay, you'd like to see that reject. If it tests it, that's okay, as long as it rejects on high volume. All right, but really the ultimate goal, I think, as a bear, is to get back down beneath that 50-day moving average and just show the world that, like, hey, we're not quite ready for that yet. But that is about a 2.6% downside move away just to test that. All right. Now, bears, just be warned that upon a break and hold of the 50-day, you do have 850 kind of staring you in the face, 10 or so points away from there. Whereas bulls, a break and hold of 9, at least on my charts, at least what I'm paying attention to, there's really nothing in the way from there. We've been talking about this a lot, up to all-time highs in terms of psychological levels. And really the next level that I'd be looking at is not necessarily that all-time high, but $1,000 a share. Not that would need to occur, same day. I mean, it doesn't have to occur quickly, but I mean, there's really no obvious psychological areas of resistance, whereas, bears, you don't really have that luxury on a downside break of the 50-day, which is really your goal, because 850 is kind of right in the way. Once you get a downside break of 850, or if you do, then you're kind of home free until about 750. Maybe that $800 a share psychological area, but still, that's about 50 points of kind of open sky, so to speak, to the downside. Now, implied volatility, compared to the last couple of months here, is still in that kind of mid-range. Okay, if you're comparing this just to the last month, it's a little high. All right, so compared to the last month, you're dealing with a potentially higher risk of IV crush. Compared to the last couple of months, you're more in that mid-range, which in a lot of ways is kind of no man's land. Still tradable, just less of an advantage in terms of the Vega implied volatility standpoint. Now, let's take a look at the expected move here on Nvidia. The next expiration we have is, of course, going to be next Friday. That's going to be May 10th. And the expected move by Friday's close, don't worry, we're going to do a little bit of math here. By Friday's close compared to this Friday's close, sorry, by next Friday's close compared to this Friday's last close, is plus or minus $43.92 per share. All right, now if we look at the chart, earnings here on Nvidia, they're not until May 22nd. So we don't have to worry about one of those days having an outsized expectation in terms of expected move. So realistically, we can divide this number here, plus or minus 43.92, by 5 trading days. But we're not quite done, because that assumes 5 green days in a row or 5 red days in a row. So right now in this market, what I'm doing is I'm adding back 50%. That changes based on the market, but lately, for a little while now, it's been 50%, and I've been sticking with that. And that gives us a plus or minus expectation with a little bit of guesswork, since we don't have the luxury. I wish we did. It'll come, I think, someday. Probably not. I don't think it's going to come in the next couple of months, but in the next few years, I think we are probably going to see daily expirations, or at least 3 times a week expirations on the big blue chips. Because, I mean, we already have daily expirations on SPY, and it really is a huge luxury, especially when looking at things like expected move. But after all the guesswork and the math is kind of done, we get an expected move by Monday's close compared to Friday's close here of plus or minus $13.18 per share here on Nvidia. Okay. Now, understand, guys, expected move, that's a technical term. It's priced by the implied volatility at each expiration. By design, that does not have directional bias baked in. That is the volatility expectation, which is a very important piece of the puzzle, especially if you're trading options. But directional bias, we can still get some, and that's what we'll finish out here. Let's take a look. We can look at the actual volume. This is all just from Friday on Nvidia. We had over 2 million contracts traded, 1.27 million were calls, and 741,000 were puts. So we did see a call side, a bullish bias on the overall call put ratio here on Nvidia on Friday. Now, one more thing that we can do, we can break this down by the short-term speculators, right? Because if we go to the 0-20 delta range, those are those far out of the money, on average, shorter dated expiration, right? On average, it's going to have the shortest expiration, especially with that kind of sample size, out of all the delta ranges, because it's the far out of the money kind of gambly style calls and puts. And those are the short-term speculators. So we have about 495,000 calls and about 404,000 puts. So we are seeing, again, a bit of a call side bias out of the short-term speculators, as well as the overall ratio. Listen, if you guys want to get my daily trade setup alerts, as well as my daily in-play stock alerts, there's a couple other perks depending on the membership tier you go for. Feel free to take a look at our members-only server at that link in the pinned comment. And hey, listen, if you're getting value out of these daily NVIDIA uploads, NVIDIA is a daily upload. I ask you to do one thing, takes half a second, it is 100% free. Leave a like on the video, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.